Welcome. Today we'll be talking about insurance as somebody that has over 6 years of experience in insurance. So I feel it's necessary to educate you through this channel. This is my first video on insurance. So let's talk about it. What is insurance? Insurance is a kind of risk management whereby someone is protected against financial loss. The word insurance is synonymous with protection. So you can protect your life against financial loss or protect any establishment or property against financial loss. I'm coming into that, okay? Now let's talk about life protection. As a human, you know you will die one day, all right? Everybody will die someday. But the fact is that nobody knows the particular day and the particular time he or she is going to die. Now, if somebody dies, he may end up leaving the family stranded if some plans, some financial plans are not put in place before that happens. And now, for you to reduce that burden on your family members you're going to leave behind, the best you can do is to walk into any life insurance company and tell them you want a life insurance policy. There are different names for different life insurance policies sold by different insurance companies. All right, so insurance companies are the one that sell these life insurance policies. So they give them different names of their choice that they feel it suits that particular kind of insurance policy. All right, so when you get to the insurance company, you have an agreement with them that okay, they will tell you these are the plans they have, the insurance plans they have, the life insurance plans they have. So, and they tell you that there is a plan, maybe there's a plan they sell for $1,000 every year. That's the premium. That amount you pay every year is known as the premium. They may have another plan they sell for $500 every year. That is still a premium which you are going to pay, the money you're going to pay. Then they may have another one they sell for $200 every year. All these are all different policies under life insurance. And the bigger the money, the bigger the return your beneficiary is going to get in the case of death or uncertainty. So at the end of the whole agreement, you said, okay, I want to pick the plan for $1,000 premium every year. All right. So when you do that, every year you are entitled to pay that amount of money. You need to pay that amount of money. So let's say today is year one, you pay $1,000 today. So by this time next year, that $1,000 will expire. All right. And you need to pay another $1,000 if you do not die. So you continue this payment until you die. But you may choose, okay, I want to opt out along the line. When maybe you do not die at the end of the whole thing, that money you have paid have gone. It's a pure risk. So the insurance company is not going to return that money back to you. All right. So, but in the course of that payment, when the policy is still in force and you die, the insurance company is not going to pay your family that $1,000 alone. Maybe when you're signing the contract, it's okay. If I'm paying $1,000 every year and I die within this time of this payment, then your family will gain $20,000. That is the claim. All right. So the person you filled as the beneficiary when you're registering the policy will be paid that money. So you pay less amount of money and you get much bigger money in return in case of uncertainty, which can be death in this case. So that is how insurance policy works. And you may think, why is the insurance paying so much when I pay less? Yes, they are paying so much because you're not the only one that picks that kind of insurance policy, that life insurance policy. Other people pick the same policy, and at the end, that money is being put in a place called pool. So the insurance company can use it to do business, real estate, or different kinds of businesses to generate much income in return. And for sure, not all the people that sign for insurance policy, life insurance policy, will die. All right, so they're still going to benefit because there are people, other people that are insuring their life and they have pool of money. to work with. Then let's talk about property insurance. All right. Sometimes you don't just insure your life, you insure the property you have, maybe your business. All right. Maybe you're a businessman and you have a store, a physical store where you sell some commodities. So you want to insure that particular establishment against fire or burglary. All right, that's against theft. So you go to the insurance company, I will tell you, okay, you tell them I want to buy an insurance policy against burglary or against theft. These are different insurance policies. They fall under non-life or general business insurance policies. All right. So they will tell you, okay, these are the insurance policies we have, the plans we have. So pick. We have a plan for $500 we should pay annually. And we have another plan for $2,000 we should pay annually as well. So in that case, they will tell you, okay, in case of something like burglary, all right, in case of theft, all right, theft. Somebody breaks into your shop, is a criminal, and steals everything you have there, a thief. Then they're going to pay you maybe $30,000 to start up your business afresh. So you guys agree. Your own is that you maintain that part of paying that premium every year. You don't need to fail. If it's a monthly payment, you pay that every month. It's very important. Otherwise, if you breach that contract, the insurance company is not going to come in financially when anything like theft happens. Are you getting that? So in that case, if at the end of one year that you paid that premium, that money, that's what you call premium, and nothing happens, the insurance company is not going to pay anything in return. Then you pay another maybe $500 the next year, depending on the premium. And if at the end of that next year nothing happens, that money is gone. Then you pay for the next year. If at the end of the third year nothing happens, that money is gone. But in the course of paying this premium and something happens, maybe there is theft, somebody, a thief breaks into your shop, that is when the insurance company comes in. Then they will pay you that amount of money you agree in a written contract that are going to pay you in case such happens. All right. So if somebody breaks into your shop in the when the policy is in force and then steals the goods you have there, the insurance company will come in. Maybe they'll pay $50, $50,000, sorry, depending on what the contract states. All right. So at the all of the whole thing, when they pay the money, but before they make that payment, they'll come to your store to make some investigation that really this thing happened, because sometimes somebody can cook a story just because they want to play the insurance company. All right. So when they do their investigation at the end of the whole thing, they find out that, yeah, for true, there there was breaking into the shop, into the store. Then they will pay you the amounts you guys agreed at the signing of the contract. So that is that for non-life insurance. So there are different packages under non-life, different plans. But with time, we are going to explain more about them in this channel. If you find this guide helpful, consider subscribing to this channel. Hit the like button and leave a comment. Do you know why you're going to hit the like button? So that YouTube will push this content to more people to educate them on insurance. Here we cover tech and insurance, because as you learn tech, it's necessary you learn insurance too. Thank you and see you some other time.